we will be talking about filing taxes in Canada, the timelines, deadlines, and everything related to taxes.
It is very important to file taxes here in Canada. It is a legal requirement. There are multiple benefits we can get through file taxes. Canada Child Benefit. If you are a temporary resident after you stay here in Canada for 18 months, you can apply for it. Especially for newcomers, they don't have to wait until the year end to apply for the GST.
For people who's doing Uber and DoorDash,
So they can deduct those expenses against the income. If CRA get to know we intentionally underreport our income, then we have to pay massive penalty. Tuition fee is a non-refundable tax credit which will reduce your tax payable balance. Let's say we are going to buy a house. Let's say you have a sizable income under self-employment income at least for 2 years. Bank can consider that income as consistent income for that particular individual. If you are willing to go to those tax clinics, you can go to there and file your taxes for free. Let's say CRA wants some information regarding your line items, and they may think, okay, there is something here, we need to get some information from this particular person. Then it will take some time. If you do it correctly, CRA will not come back after you.
welcome to North Pacific Podcast by Esanka Productions. In today's episode, we will be talking about filing taxes in Canada. We will break down all types of taxes for persons and businesses, as well as the timelines, deadlines, and everything related to taxes. For that, we have a tax specialist. We invited Esanka Fernando to our studios today. How are you doing?
I'm doing great. Thanks for having me. Really appreciate the time. Yeah.
Thank you so much. So let's start with what are the types of taxes that we have in Canada, and how important it is to pay attention to taxes as a newcomer, maybe because different countries have different types of tax systems and it's different from one another. For example, some countries might have a system where the normal people with a normal income might not need to file taxes as per se. So for someone like that, so what is the importance of taxes in Canada?
Well, I'll start like this. When we focus mostly newcomers, most of the newcomers, let's say 80% or 75% of the newcomers who came to Canada actually did not file taxes in Sri Lanka. So as example, I did not file taxes in Sri Lanka. So when I came to Canada, then I got to know about the taxes, and it is very important to file taxes here in Canada. So to answer your questions, in Canada, it is a legal requirement to file taxes, as well as there are multiple benefits we can get through file taxes. Let's say, so we have so many students here, so they can actually claim what they pay as a tuition fee through their tax return. And also there is a government benefit called, everyone knows about it, like CCB, Canada Child Benefit. So you can apply for the Canada Child Benefit after, if you are a temporary resident after you stay here in Canada for 18 months, you can apply for it. So for that, you must file taxes. And also there are some other benefit, like there is some savings accounts called tax-free savings account and RRSP accounts. So to get the benefit, you must file taxes in Canada each and every year. So it is very important, and that makes your financial record clear. The country like Canada. So that's the main thing.
Okay, so for the benefit of a newcomer to Canada, as we're talking, what are the main types of taxes we have in Canada for individuals as well as businesses?
If we focus for the individual, the main taxes we need to focus about individual taxes, which means the tax return we file at the year end. But there are some other taxes we should pay to the government when we go to shopping, daily shoppings, and we can see GST, HST, in terms of Ontario, they have HST and PST in BC, provincial tax, and GST is goods and service tax here. And also there is a benefit benefit of GST as well, like every 3 months government is paying GST for each eligible family members. So for especially for newcomers, they don't have to wait until the year end to apply for the GST. So they just need to provide some information to the government, then they can claim the GST every 3 months. So those are the main thing. But for the business side also, there is a corporate income tax which they file uh, every year end, and plus on top of that they have to make sure they pay proper payroll taxes, and if they have any capital gain they have to pay capital gains taxes and something like that. Those are very important taxes we need to know about as a newcomer.
Okay. So you talked about GST and PST. I think anybody who goes to the grocery store or maybe get a service from a company, when they get the bill, they see that there's GST and PST deducted from, added to the sum, total sum. So, but some other provinces might not have the PST. So, what are the differences between GST and PST? GST is the federal tax, and the PST is the provincial tax. So, what are the factors that differentiate these two?
Yeah. So mainly, as we all know, we know that government needs money to run the government, even for the provincial government or the federal government. So federal government is responsible for collecting GST and administrating GST part. For the PST's provincial sales tax, which directly goes to the BC provincial government. So the main difference between GST and PST, GST is mainly for the federal government and PST mainly for the BC government. But when we talk about the interprovincial wise, or if you go to Alberta, there is no PST. But in BC, we have to pay 7% PST tax to the government on top of the GST 5%. So GST, that is countrywide one. And some provinces like Ontario and some other provinces, they have HST, which is around HST included the GST and the provincial tax part, which is around 13%. But in BC, GST is 5% and the PST is 7%. It's around 12%. Yeah.
Right. So we'll talk about the tax filing season. So as this is basically very important for someone who's new, if not for someone who's been here, they already know. But for a newcomer, when should they pay attention to filing taxes during the year?
So our tax year beginning from 1st of January to 31st December, but the government gave the 2 months period for all the employers to issue all the tax receipts to the employees until 29th February. So the government gave all the employees to for 2 months period to properly issue the tax documents to the employees to file their taxes with the government. So after 29th February only we can start filing taxes for the previous tax season. So tax, in summary, we have until after we finish the 31st December, we have 2 months to prepare, and after that we can file taxes.
Okay, so apart from them, what are the important deadlines that one should keep in mind when filing taxes for individuals as well as businesses?
So okay, for individual, as I mentioned earlier, so they have to make sure that before 30th April they have to file taxes, and for the business and before 30th April they have to file. But for the self-employment, like someone who is doing let's say delivery business, so they are delivering with DoorDash or so Skip the Dishes or something like that. So those are self-employed personnel. They have until 15 June to file taxes. But if they owe taxes, they should calculate their taxes and pay taxes to the government before 30th April. So that is deadline for the payment. for all across country. So they have to pay that. But to file taxes for the only self-employed person, that is before 15th June. For the business, they have 6 months after their year end finish. Let's say, as example, 31st December, their year end will be finished at 31st December. They have until 30th June to file their taxes. So they have a little bit of room than the individual.
So for a student or a newcomer of other type, what are the kind of documents they should have in their hand before they start filing taxes? What are the documents they should collect from which institutes, and how does it happen?
Yeah. So mainly, let's focus about students. So let's say they work part-time. So the employer must issue T4 documents. So T4 document includes all the salary payment throughout the year as a gross payment, and all the amounts they deducted like CPP, EI, and the income tax. So that is the main document. That means how much we earn and how much we pay as taxes. So, and the tuition fee. There is a tax slip called T2202, which include all the tuition fee payment that particular students to the university or the college. So he must have that document. He or she must have that document. In case if CRA asks, they have to provide those documents as evidence to claim tuition fee non-refundable tax credits. Those are two main document. But let's say you have some investment income, like then you have T4 slips. Let's say you have some additional money in your account, and then you will earn interest on that. So then bank institute they will issue T5. And let's say you do share transactions and you have capital gains, then you have T5008. Like that, you have let's say you are someone is doing contract, then you should have like T4A. And let's say government pay some EI benefit or something like that, then you have T4E. Like that. So each and every income, for most part, you have tax slip. But mainly for the students, they should make sure that they have T4 and T2202 ready before filing taxes.
So I think also for people who are doing self-employed, like you mentioned earlier, who's doing Uber and DoorDash,
Yeah.
they can download them from the app. What is the kind of document that
that's
they
a very
have?
good question. Yeah.
Yeah.
So for income, actually, some like DoorDash, I think they have a summary of income they received through DoorDash. They can download that. But main thing is to keep record of all the expenses, like fuel, like their meals during the time, and insurance expenses for the vehicle, because they can claim those expenses their tax return. So they can deduct those expenses against the income they earn through that business. So it is very important for them to keep track on all the expenses plus the number of kilometers. So there's a process of calculating how much we can claim. So for that reason, they must keep record of number of kilometers they drove through during the year to earn that specific income.
We already talked about some deadlines that we should keep in mind. What if we miss a deadline? A person misses a deadline. So are they penalized for that, or do they get a benefit if they file tax as early as possible?
So when we talk about the penalties, is if you, let's say, we didn't file taxes on time, like before 30th April, we didn't file and we didn't pay. And we filed taxes after 30th April and the tax results come as a refund. So in that case, government will not do anything. So no penalty fees, because you have a refund. So government will pay that money. However, let's say if you have a balance O, so we couldn't file the taxes before 30th April, and after we file, so we come across, okay, we have to pay to the government. Then government charge penalty based on the amount owed and late filing fee plus the 5% penalty fee. So that is the penalty part. But we have to make sure that as a newcomers and like general people, we must report our income properly. That is one of the main point. We must report our income properly. If any case CRA get to know we intentionally underreport our income, then we have to pay massive penalty. It's like 50% of the unreported income, which is way bad. So it is good to report proper income to CRA and keep our record clean with CRA. That is very important thing.
Okay, so are there any tax benefits or credits especially available to new immigrants? Because we see that Canada is having a lot of new immigrants coming in every year. So do they have any special benefits?
It's not a special benefit, but there are some benefits for each eligible individuals. Let's say GST. So BC government every 3 months they pay GST to each eligible family members. To get the GST, as I mentioned earlier, so you have to provide some information to government, and then they calculate your eligible taxes and they will pay you every 3 months. Plus, so when we talk about the students, so they can actually claim the tuition fee paid throughout the year in their tax return as a non-refundable tax credit. So the very important thing is we should know what is the difference between the non-refundable and refundable tax credit. So most of the people I know, when I file taxes, they have this intention, like if we pay 20,000 tuition fees, they are expecting, so we are getting that 20,000 back. It's not like that. You will not get the 20,000 back as a tax credit or tax refund. It's not like that. So tuition fee is a non-refundable tax credit which will reduce your tax payable balance only. It will not give any refund to you. So non-refundable means it will not refund to you.
It will not come back to you as
no
cash.
as a refund. So sometimes it will definitely reduce your tax payable, which will result to get some refund if you pay more taxes, but you will not get tuition fee back at all. That is non-refundable tax credit. Other than that, we have Canada Workers Benefit. That is refundable tax credit to if your family income. So if you are an individual, if your family income is less than around $23,000, then you will get certain amount from the government that is refundable. So government will give you that money. So and also, as we talk about CCB, Canada Child Benefit. So once you stay, if you are a temporary resident, if you stay 18 months here and you have a kid, if you have a kid, definitely you can apply for the Canada Child Benefits as well. So that the amount depends on your family size and your annual income. So for those reasons, we have to make sure that we actually report our proper income to the government. Then they calculate the CCB amount, and every month they will get a fair amount of money from the government as well. So those are very basic tax credit and important tax credit which we have here in Canada. And on top of that, we have Canada training credit, which will give, like, if you are a student, if you pay tuition fees during the year, then you can claim another $250 government will give you as refundable tax credit. So that is also available for students, but there are some certain conditions you have to meet. So you have to make sure that you are within that eligibility criteria, then definitely you can claim those tax credit and get the benefit out of it.
So I just, this question just came to my
Yeah.
mind. If someone gets, for example, if someone does a job that doesn't deduct their tax properly during the year, or someone who's self-employed who have to claim the taxes at the end of the year, if they get a huge amount of taxes to pay, can they pay it in uh, as what do you call it?
Installment.
Yes. Can they pay it as installments, or
Yeah.
do they have a facility like that?
Yes, they do. And so first they have to file taxes with CRA. Um, then when you go to my CRA account, that means your online portal with the CRA, then there's a specific option that you can select, uh, pay option. Under the pay now option, you can actually select how many installment do you need to pay this tax. Let's say 4 installments, or otherwise 12 months. But when you make that installment, you have to understand that there is an interest portion to that as well, because you are paying like in 12 months. So that interest also will be added to the outstanding balance. But yes, to answer your question, yes, there are some installment plans available in my CRA account. You can pay. Yes.
Sure. So I think it's time to talk about the small businesses, because we see a lot of small businesses especially, booming through the newcomers. So when they try to register their business, they might consider the different types of businesses. There could be corporations, there could be partnerships and proprietorships. What are the tax implications of these types of businesses that they can register their business?
Okay, so let's focus on the proprietorship. So it's more like self-employment. The only thing is, so if you are a temporary resident, you can register a sole proprietorship, so which is actually unlimited liability. That's, you are a sole owner, so if something goes wrong, you are liable. So business and you, it is not a separate entities, so it is one entity. So it's under your, even though it's under your name, or like business is some other names, but you are liable for everything if something goes wrong. So that's the main difference between the sole proprietorship and the corporation. So when we talk about the corporation, the owners and the corporation are two separate legal entities. Corporation is separate legal entity, and the directors or the shareholders are separate entities. But in the sole proprietorship, many international students, they do these things as sole proprietorship, but that's fine. But when we talk about the tax implication, so sole proprietors, they don't file taxes separately. So what they are doing is report the income in their personal taxes, and there is a separate tax schedule called T2125, which is for statement of business and commission. So there they can actually report all the income they earn through the business and all the expenses related to that expenses. They can deduct those expenses against that income. So there is no separate tax filing for the sole proprietorship. For the partnership, same as the sole prop. For partnership also, there is no separate tax filing. So what partners are doing is, they can register that as a limited liability partnership, or as a normal partnership with full liabilities, like sole proprietor. So they so partners, they have to actually calculate their profit or the loss, or the income of the the net loss and report under their personal tax or their corporate tax. So corporate completely different. So they have a year end and they have another, as we talked about earlier, they have another 6 months to file taxes. So the individual, they have to file taxes separately. That means owners, the corporate, the corporate must file taxes separately, whether they have a active ongoing business operation or not. Even though they have a zero income, they must file taxes every year.
We already talked about that different provinces have their own tax structures. So in case of a small business, are there any other differences in having to pay taxes when it comes to paying taxes for a small business? Are there any tax friendly provinces in Canada, or what are the differences in each of these provinces?
Let's focus about the individual taxes first. So when we talk about the BC, because we are in BC, so individual taxes, the federal taxes separately. When we talk about the provinces, yes, tax bracket, the tax percentage start from 5% and it goes up to 30-35%. But specifically in Alberta, they have this flat 10% tax rate until someone earns $42,000, and their tax rate is range from 10% only up to 15%. It will not go beyond the 15%. So that gives high income earners the little bit of room to save some money as compared to the other provinces. And we talk about the tuition tax claim. So in BC, provincial wise also, we can claim that non-refundable tax credit of tuition fee. But when we go to the Ontario, they don't allow after 2017 to only provincial taxes. They don't for the provincial taxes, Ontario government, they don't allow to claim the tuition fee paid as a non-refundable tax credit. And when we go to Saskatchewan, and there is a separate program called graduate retention program, where they can actually claim up to $20,000 from their provincial taxes when they study certain program in certain universities. So there is a clear differences between each and every province in Canada regarding taxes. And Quebec especially, they have their tax system is completely different from other provinces, and they have higher marginal tax rate of around 25%, 9-8 or somewhere around that. When we talk about the corporation, the as we discussed before, the main incentive for corporation is small business deduction, where every province has that one. However, in provinces like Nova Scotia, the tax rate for the small business deduction is around 2.5 as compared to 2% in BC. And Manitoba, actually there is no taxes. That means 0% if you earn less than $500. So those type of differences are there. They develop their tax system in a way that attract new business to their provinces. Then more business will come to their provinces, and it will help their economy as well. So those are main differences in percentages in provinces.
Right. So we talked about the tax deductions that the small businesses have to pay, but also do they also have incentives, tax incentives and credits available for the small businesses?
Yeah. So,
Canada wise.
Yes. Like individuals, corporation also have some tax credits and incentives. The main incentive, as we talked about earlier, the main thing for the small business is small business deduction, which is if your income is less than 500,000, then you have to pay like very less taxes. On top of that, there are multiple tax credit which you can apply if you are doing certain type of business. Let's say you have a foreign income, so, and foreign business income. So if you have a branch in foreign country, and if you earn income, the corporation earn foreign income, then there is a tax credit specifically designed for that, to avoid double taxation. So then they if they pay taxes there in that foreign country, they don't have to pay taxes for that income here, either for the business income or the non-business income. Other than that, there are some credits available, like investment tax credit, and plus if you are doing scientific researches and research and development, if you spend money for specific areas, like research some products and farming, especially Atlantic provinces, if you do farming process or the fishing process, manufacturing plant, then you can apply for some credit specifically designed for those provinces. So there are some credits available for businesses as well. Yes.
We already talked about a lot of newcomers, maybe students, they're starting registering their small businesses as proprietorships. So when they file taxes, do they have to file separately, or do they have to file taxes at once?
So let's say they are doing business as self-employment. If they do the business as a self-employment, not as a corporation, then they don't have to file taxes complete separately. They can include that income and the expenses related to that business in their tax return. So there is a separate tax schedule called T2125, that is statement of business income and commission and expenses, where they can actually report all the income related to that particular business activity, and all the eligible expenses relating to that business activity. So to answer your question, so they don't have to file taxes separately. They can include all the income and expenses, or let's say profit, in their personal tax return.
We see a lot of small businesses and self-employment coming up in areas where there are a lot of population. The more the population, the more we have small businesses and self-employment. So what is the importance of these self-employed newcomers or anybody? What is the importance of them filing or reporting their income when they file taxes?
Oh well, so as general people, sometimes we think, okay, so let's say I earn some income, so no one knows about it, only myself and my family members know about it. Why do I pay? Why do I need to report those things? Why do I need to pay additional taxes on that? So that is something we need to think twice. So it is very important to report those income and also expenses. So we should know, like all the self-employment people, they should know that they can claim all the expenses relating to that income. They can claim under their personal taxes. So they don't have to pay taxes on the gross income. So let's say after all the expenses, they ended up with loss. So that loss will reduce from the taxable income, which will actually benefit for them. Then they don't have to pay taxes for that. So let's say they have a couple of thousand profit. So then they may have to pay some additional taxes plus CPP as well. So that's the main thing in self-employment. You should pay CPP for the government, like employees do. If you are a self-employment person, you must pay the CPP to the government. That is something all the self-employment people should aware about. That is, which is not tax but CPP, which you will get the benefit out of it in future, not immediately but in future. Other than that, let's say, so our main purpose, so we came to Canada as a temporary resident. Our main purpose is to get a permanent residency and settle here and get the citizenship and get the house, like build our life here. So let's say, so we have a permanent residency and we are going to buy a house. Let's say buy a house, then you have to provide your tax returns to the bank and they evaluate your income. Let's say you have a sizable income under self-employment income, at least for 2 years, 2 or 3 years, then actually bank can consider that income as consistent income for that particular individual, which is actually important when we get the mortgage for the bank, because it will result to increase your mortgage value. So those are some basic benefit by reporting proper income to the government. So there are benefits when you actually report those income to the government.
The small businesses, their main purpose is to increase their profits. So when they also have to pay taxes. Let's talk about the ways the small business owners can maximize their tax savings.
So as we discussed earlier, for the corporations, the main incentive is small business deductions. So they have all across Canada. For if your business has less than 500,000 income, definitely you are eligible to get that incentive. On top of that, so they have those government, as we discussed earlier as well, the credits. So they have to make sure that they apply for, when they file taxes, they apply for all the credits available to their businesses, like research and development, farming, manufacturing, investment, foreign business, and things like that. So they can apply that credit as well. On top of that, so there are some government benefits available. Let's say, so if you are hired digital marketing person, so you are planning to invest in digital marketing, so there are some specific government program designed to motivate those functions within the company. So government will pay up to for the corporation up to $20,000 if you are eligible. So for that you have to prepare marketing plan and provide that marketing plan to the government. Then they will approve how much you are eligible, then the government will pay that amount. So the businesses can get that benefit as well. So the businesses, they don't want to pay that. And plus there are summer program, so government funded program for in summertime. If you hire Canadian citizens who's a school children, there is a summer employee program. Government will pay those salaries to that Canadian citizens, where companies do not need to pay those. So the businesses can get that benefit, and they don't want to pay their money, so they can use government money to pay and get the benefit out of it. And when we talk about to save taxes, we can actually consider paying salary versus paying dividends. Let's say we have a corporation and we have a huge profit, but we didn't pay any salaries to the employees. Then as a shareholders, we can think, okay, we don't need to get any money as a salary, because if we take money as a salary, money out as a salary, then our we have to pay higher income taxes. But if we can take as a dividend, the dividend taxes are percentage for the dividend taxes are relatively low compared to the personal taxes. And so that's one way. And there's other way, like let's say there's a family member who's actually willing to work for the company, and he or she has a lower tax bracket. Then we can pay that person to work in the company. Then company can actually deduct that payment as a expense, and also the person who is actually working, his or her tax bracket also lower. That will help to family income as well. If you are paying to higher tax bracket person, which will increase the tax liability for that particular person. So there are some as we talk about like small business deductions, keeping record keeping, and get the government benefit, and the dividend versus salary. So those are some basic steps we can get to maximize the tax system.
We also have payroll taxes for someone who's employed. When they get their pay slip at the end of the 2 weeks, they might see a lot of tax deductions. Let's talk about that. So what are the deciding factors there are in a payroll tax?
So when we get our pay stub, we can see so many deductions. We have income and there are so many deductions, like as example, provincial taxes, federal taxes, CPP, EI, and some other like RRSP, and we can name so many in Canada. So there are so many deductions. Like so those are so as we talk about, like CPP is, means Canada Pension Plan, and EI is employment insurance. Those are main two types of deduction on top of the taxes. Yes, definitely employers, they must deduct from our paycheck and remit to the government, and CPP and EI as well. So government has this specific formula based on our pay range, and how do we pay frequently of payment, like monthly or bi-weekly or mid-monthly. Based on that, government the government has this specific formula how to deduct CPP and EI. So those are main three deductions from our paycheck. But on top of that, there may be like medical, as example, for if in I know some employers, they have additional insurance coverage for employees. For that, employees should pay little bit of additional money to the company, like $10 from each paycheck, deduct from their paycheck, and they have to pay to the company. And let's say if we request from the employer to deduct $100 from each paycheck and remit into the RRSP account, so it can be deducted from our paycheck. But main three deductions are taxes, CPP, and EI. So when we talk about the CPP, there is a maximum limit. So if your income is more than 66,600, CPP will not deduct after that. So if your income is past more than 66,600, CPP will not deduct. So EI also has a certain limit. So if your income is cross that limit, EI will not deduct. So after that, so those are three.
So for a business owner, how important it is to comply with the payroll tax regulations?
Yeah, so it is very important. It is very important to comply with all the regulations here in Canada. Specifically, when we talk about the payroll taxes, the main thing they should do, issue the pay stub for the employees. So each bi-weekly or monthly, whenever the frequency you are selecting, you must issue the pay stub for the employees. Then only employees has opportunity to see how much they receive, how much the taxes deducted, how much the CPP deducted, how much the EI deducted, and how much he or she is getting as a net income. Plus, each month they must remit to the government whatever they are collecting from us. Plus, employer must match the CPP and EI portion and remit to the government each month. Before 15th of following month, they have to make that payment to the government. That is very important. As an employer, you must obey those rules. Plus, they have to, as we discussed initially, they have to issue T4s to all employees before the deadline, like before 29th February. they have to issue T4s to the employees, and plus they have to issue T4s to the government, CRA, and they have to issue to the CRA. Then CRA has that record as well.
How long should businesses retain their tax recorded?
As a CRA guidelines, all the corporation must keep their records for 7 years. So which means CRA can come back and ask anywhere between those 7 years if they need to get any information. They can come back for the business and ask, okay, please give us this particular year's records. Then they can audit. So we for corporation, they must keep records for 7 years.
What about proprietorship?
So for the proprietorship, they don't have like a specific years, but again, you must keep records for all your income and expenses. The CRA can come back and ask, like, let's say you claim some expenses in 2016 as deduction against your income. Let's say meal expenses. So you are doing Uber and you ate somewhere and you claim $2,000 for throughout the year. If CRA may think, okay, this is not this is really high amount, then we have to audit him. Then they are requesting actually all the supporting documents for that particular line item. Then you must provide those things. So if you cannot provide those evidence supporting documents for that particular line item, CRA can take that expense out and recalculate your taxes without that expense. Like that, you have to maintain clear record of your income and expenses.
When we file taxes, there are different methods different people use. There are some people, they file taxes on their own using a software, or someone would call a tax specialist. As you think, what are the advantages and disadvantage of each method that these people use?
Okay, let's say you have a clear understanding of how tax system works, what are the credits available, so what are the benefits he can get maximize. Then actually he or she can buy a software and do the taxes by himself. But if you are a newcomer to here, let's say this is your first year, and then I think it is good to go to the tax professional and get it done through professional. But again, I would say if you are confident about yourself and you have a clear understanding how the system works and what are the benefits available to you, definitely I would say go for it. So you can pay to some. There are some free softwares available, and there are some paid softwares available as well. Then you can do your own taxes. Like if it is very simple taxes, like you have only one T4, there is nothing more, then get the software and do it by yourself. But sometimes it is for softwares also you have to pay sometimes $60-$70. But when it's come to like $60, $70 or $100, then it's better to go to the tax professional and get it done through tax professional, because it will not cost $100 or $150 to get it done through tax professional. I think it's always good to go to the professional because they know, they have experience doing taxes. They know what are the credits available to the particular client, and they can understand the situation. Then they can recommend things to maximize the tax savings.
I think I should add something here, because a newcomer might not be very familiar with the systems, and they might maybe miss
some credits and credits available
to file some of their income. So in that case, it's better to go to a professional, because they take the responsibility. And so in that way, so when you select the softwares, are there any are there anything that you have to pay attention to when you're choosing a self-filing system?
most of the tax softwares certified by the CRA. When you go to the CRA website, there's a separate option to see what are the softwares certified by CRA for particular years. Let's say for the 2023, if you go to CRA website, there are so many softwares certified by the CRA for 2023 tax filing. So if you select one of those certified softwares, so you are in good hands. So you don't have to worry about. So in those certified softwares as well, there are free versions and paid versions. So some paid versions, they add like self-employment income, investment income, tuition tax credit. Mostly for the free services, they don't give all the credits available for free users. So you have to pay to get the all the credits and benefit available. So that is how they build the software, then they can earn money. But sometimes, like so it is good to compare like premium version, deluxe version, or free version. Then it will, like, let's say TurboTax. So they have this version called free version, and they have deluxe, and they have premium. So for the free version, they have like 1D for tuition credits and stuff like that. And for the deluxe version, they have T for tuition credit, investment income, and rental income. And for the premium version, they have self-employment income, rental income, investment income, capital gain taxes, and everything. So when you go to the premium version, you have to pay more, like $200 or $260. I think it's around like $180 for TurboTax. And HR blocks also, they have premium, standard, and deluxe, something like that. So it is always good to compare what is included in the free version and what is included in the standard version, what is included in the deluxe version. So then you can select what version it is suitable for your tax situation, because each individual's tax situations are different. Like my tax situation is different from yours. Someone else is doing self-employment income is different from mine. So then you have to make sure you use the correct version to file taxes properly.
If someone wants to get rid of all that hassle and go to a tax professional, what are the things that they should keep in mind, and what are their rights, and what kind of information they should they should share with their representative? Because, for instance, we know a friend who didn't get the tax return yet, because after all this time, because it's been a really long time, and because they're saying that we asked them to ask for some information so they can log into their account themselves and see if the CRA needs any information from them. And in that case, they told us that the tax representative has not shared that information with them. So that there could be issues when it comes to the reliability of this representative. What should someone keep in mind in that case when choosing a tax representative for them?
So let's say like that they have a code called ID called representative ID. So it's always good to check whether the representative is registered with the CRA or not. If someone has the representative ID, so that means he or she registered with the CRA and he's actually liable for tax filing. But when you say your example, I'm happy to add this one. So there are some instance. So I had a client. This is like very rare situation, but I had a client in 2022. CRA took 9 months to assess the tax return. That's 9 months. It's very rare. It's like I didn't have any experience like that before 2022, but yeah, even CRA did not request any further information, and it was in his CRA account we can clearly see that the tax return status in process for all 9 months. And they call, and I called, and they called multiple times to CRA to ask, do you need any more information, like why it's getting delayed, because they also did not give any proper information, proper clarification for that. And there are some instant they take some times, like if they need to review your taxes. Let's say CRA wants some information, some further information regarding your line items, and they may think, okay, there is something here, we need to get some information from this particular person. Then it will take some time. So it will take 3 months, it will take 4 months. But yeah, it's always, if you have a representative has access to the CRA account, and he or she can always check CRA account on behalf of the client and see what is happening and what is going on. It's always good to check the representative ID. Actually, whether he's actually registered in CRA or not. Yeah.
For someone who's keen on knowing more about taxes, are there any resources for businesses as well as individuals? Does the Canadian government has a resources available for the public to refer to?
Yeah. So if I come across some issues regarding taxes, when I do taxes, so only source I trust is Government Canada website. So that website has each and every information, I would say everything about, let's say, taxes. When you go to the Government Canada website and tax page, there are so many information available, like guides, how do you do that, how do you fill this form, what are the information request, what are the information you need to complete this form. Like, I would recommend everyone, if you are come across any issue, go to the Government Canada website, go to the tax page, or go to the any page you need. Like, if it is related to immigration, go to the immigration page and get the information. If you have come across any issue with the taxes, go to the tax page and get the help from there. Other than that, there are private companies, like I said, TurboTax. They have a very good website with very good information. So I personally recommend to go visit that website as well, because they are very simple and clear answers most of your issues.
So apart from that, if somebody is confused, if they should get the software, if they're going to do the taxes themselves, or they are going to a tax representative, so are there any government programs or community organizations that provide tax assistance to public?
So there is this system called tax clinics. So most of the people got the email saying that we have these tax clinics, different places. Then you can go to those tax clinics and file your taxes, to file the taxes. And as example, I know University TRU, they're in Kamloops. So they have these students, they have tax experts there, students. So they file taxes on behalf of other students for free. And government also, as I said, there is a scheme called tax clinics. So if you are willing to go to those tax clinics, you can go to there and file your taxes for free. Those are very good, basic good benefits for the
general public.
eligible people. Yes.
So as a tax professional, what final advice do you have to give to the public, or newcomers or general public, about managing their taxes in Canada?
The main thing I need to say, make sure you report your income properly. Make sure you do that properly, and you will not have any issues with CRA for sure. If you do it correctly, CRA will not come back after you, because you know that you are clean. So that is something. And keep your records. If you, especially, I know so many newcomers now, they are doing businesses, self-employment businesses. If you claim those income and expenses, but make sure keep the record. CRA can come back to you and ask, please give us the supporting document for this particular income or the expenses. Then you must provide. If you cannot provide, then there will be definitely consequences. So please properly file your taxes, properly report your income, it will definitely one day benefit to you. Even though you pay a little bit of extra money to the government, it will definitely positively impact in future into your life. Yeah.
Great. I think we had a really fruitful discussion with Esanka Fernando today. With that, we come to a conclusion of today's episode, and I would like to thank Esanka for coming to our studios today and sharing all this information with our listeners and viewers today.
Thank you very much. Thanks for having me, and all the best for your future as well.
With that, we come to the end of today's episode, and we will meet you with another episode. Thank you. Bye bye.